Good morning, ladies and gentlemen. Everybody, welcome back to another pre-market live stream. So, if the video looks a little off, it's because I'm using a different camera. I don't have the same camera I've been using, so video might look a little off. It actually looks terrible if you ask me personally. From what I'm seeing here, it doesn't really look good at all. Yeah, the video looks terrible with this camera I'm using, so I'm going to hop right into screen share and just share the screen from here at this point. All right. Yeah, I don't know. I'm using a Logitech camera, and it looks terrible. So, anyways, good morning, guys. We're going to hop into this. All right, not going to really be any video today, but that's all good. So, looking at the screen here, so right now we're going to cover the stock market or the SPY. As you guys can see, it's still pretty volatile. Had a pretty strong gap up from 253 up to 256. For me, the market's still downtrending at this point. If you look at a 5-day chart, just going like 5 days on, you can definitely see the market is still downtrending. We briefly broke over kind of the downward trend line resistance, maybe, but all in all, we are still, in fact, dropping. Right now, today, we do have the Fed talks and the discussion of whether or not we're going to be raising interest rates again. If we do raise interest rates again, chances are we're going to see the market drop today. If we don't raise the interest rates today, the Feds don't, there's a chance that we're going to see the market bounce. But even so, even if the Feds don't raise interest rates, I don't really think it's going to stop the market from doing what it wants to do, and that's go down right now. So everybody at this point, I think you guys should all know that we are in a downtrend. We're definitely in a downtrend here, and so we're soon to be a bear market, right? Personally, I think we're already in a bear. No, we are in a bear market. I'm not going to say we're not. We are. We're definitely in a bear market. So right now, most of what you guys should definitely be doing is looking at shorting stocks, being short bias, playing inverse related ETFs for the volatility index and stock market. Those are going to be where you're going to find good opportunities. So all in all, going to be following the market very closely today. Again, we're at this 253 point, which is basically the 52-week low over here at 252.92. So we're right at that last little line of support that everybody is hoping, just hoping it holds up. The only thing that's holding this market right now is hope. That's it. There's really nothing more to it. The market is filled with tons of hope that it bounces here. And the funny thing is nobody even knows it. Nobody even knows just how shaky the market is right now. Okay, nobody's scared. Everybody's complacent. So what I'm most fearful of is that a bunch of people right now are going to get freaking smoked. Okay? Not you guys. You guys following here know very well what you should be doing, but the rest of the world's going to get just smoked here soon. Here's the volatility index. Look at the volatility index when back in the beginning of 2018, January, February, that sell-off, right? You guys know that sell-off we're talking about. Okay? Think about it. Look at back in the beginning. Okay, guys? I know I'm repeating myself here, but again, think about this. Look at the volatility index back in the beginning of the year in 2018 when we had that first drop. Okay, look at how freaking big the volatility was. Okay, and by the way, for those of you tuning in right now that are like all about trading TVIX, VXX, UVXY, some type of inverse stock market ETF, just know that those ETFs you're playing are in direct ties and are directly correlated with what I'm showing you on the screen, and that is VIX, which stands for the volatility index. This is like a fear gauge. This measures volatility. When this is going up, that's more likely that the stock market is in shaky times. Well, the funny thing is back at the beginning of 2018, the volatility went nuts. Okay? Right now, the volatility isn't even all that high. We're just starting to break into the 25, 24 area. The volatility is still kind of at a medium level, which tells me that nobody is even concerned or there's really not that many people concerned with where the market's at right now. And the funny thing is, the markets are in way worse times than they were in the beginning of 2018. That drop in 2018 is like a cakewalk compared to what we've been doing. And the volatility index does not represent that, which tells me that right now, a lot of people are actually complacent and don't think the market's going to go down, which then means that more people will get crushed when the market goes down because there's less people on top of this trend right now, okay? The market is most likely going to go down from here, right? Which therefore means volatility should be going up, but right now it's pretty complacent. Secondly, this is the volatility index. This measures the volatility of the fear. When this starts going up, the likelihood that the market's going to go down is greater. Well, what do we see here? Let me delete these old drawings. What do we see here right now on the volatility index? The volatility index, excuse me, I'm zooming in like an idiot. The volatility index, what does it look like? I'm not going to say any more here. I want you guys here on YouTube to answer this. There's a 5-second delay on YouTube, so it will take a second before the answers come in. But what do you guys see right now on the volatility index right here where I'm circling the screen? What sort of pattern is starting to occur? What does it look like to you? Okay, and I'm going to stop there. I want to hear what you guys have to say. Exactly. For sure. You guys are all right. Arguably you could see an inverse head and shoulders, but the first gentleman here was Brian Trong saying a bull flag. Then you have Daniel, bullish, Yuri, uptrend, Alex, flat top breakout, a wedge, bullish pennant, not a bear, consolidation. So a lot of those are correct. So let's dive into it a little bit closer. What we're really seeing is, and here's the thing, is I call them bullish pennants. Some people call them bull flags. Really, at the end of the day, as long as you know what you're looking at, it really doesn't matter what you call it, right? You know, a piece of poop could be called a Cheez-It for all I care. It just depends on how you perceive it, right? So what we see here is a sort of like a bull flag and a bullish pennant, right? Look at this. Okay, that right there is priming up, in my opinion, for a breakout to the upside. Okay, so again, right, if we look at this a little closer, we have, you know, it's going down and up and down and up, and it's just channeling up and up, and so chances are we're getting ready to push. Okay, that's the volatility index. All right, now I'm going to show you TVIX. Look at TVIX. You tell me, what does TVIX look like to you? Does it look bearish or does it look bullish? Well, we just fresh broke out. We're on an uptrend and we're breaking out of previous levels. Okay, so the difference is look back in, hold on, let me also go back to volatility. Here's something I got to map out for you. Okay, I got to go back to the volatility index. So let's look at this at a year chart. Okay, I know I'm moving kind of fast. So here's the difference between the beginning of 2018 and now. What's the difference here? Beginning of 2018 was just this big drop, big spike. We came crashing down, and then it kind of failed, right? But this time, we dropped, we spiked, we came down, we put in higher lows, and now we're trending up. So we're actually starting a trend right now. Last time was just a scare, spike down. This time, it's a down, you know, it's going up and now it's trending up, okay? So back to TVIX, 180-day chart, just for the purposes of this video, you can see that we are starting to break to the upside on the ETFs, TVIX, and the volatility ETFs, okay? Secondly, go back to the market, right? The market is, without a doubt, in a downtrend. Let's go to the, we'll do the yearly chart here, right? So yearly chart, okay, going from top down, that's a downtrend. We have your top, lower high, down, right? We're knocking on that door of support. So chances are markets are going to move lower. But the scary thing, as I was mentioning, is when you look at the volatility index, nobody seems to have a freaking clue, which tells me that more people are probably going to get crushed not necessarily get crushed, but the thing is just nobody sees it. Nobody even knows. And the thing is, guys, for you and everybody in here on YouTube channeling in, watching, this is for the ones that are here all the time. You guys are always coming back and watching the streams, which I truly appreciate. You guys know as well as I do, I've been saying this for so long that the market is going to come down, and we're so close and we're so ready. And again, you got the people that call me an idiot, and that's fine. But that's it. We've been seeing this coming for a while, and it's starting to take place. And we are all, I am just all over this, dude. I'm already short the stock market. I've been short the stock market. I'm killing it, not necessarily killing it, but I've been short the market. Okay. And I'm going to keep shorting until it tells me otherwise. So right now, wise decision for you guys to follow. If you're bullish traders, right? If you're someone who likes trading long bias, you're probably going to want to focus your energy and attention towards volatility ETFs. I understand that when they cost $40 and $60 a share that they don't look super appealing, but yes, you can still make money even if you have a small account. All right, I'm not saying to only trade those, but that's definitely a good area to focus some of your attention. All right, now that you guys have heard me spiel on and on and on about doomsday and how the market's going to crash and we're all going to become poor overnight, how about we actually look at a stock you could potentially trade today? Sounds good to me. All right, this is Micron, okay? Yeah, there's too many people that are complacent in this market. See, this is another problem, guys, is here's the issue too. All right, I'm going to mention this, and this will be sort of quick. I'll try to make it quick, all right? I don't want to waste your guys' time. So here's another thing is when a bear market starts, it has to start with the correction, and then the correction leads to a bear market. So if you're a bullish trader all the time and then the market's correct, right, what you end up saying is, oh, it's just a correction, it's going to bounce, right? And you never think of the downside, that this could be the top. So then you become complacent, which each time it corrects, thinking it's going to bounce. Well, here's the thing, is a bear market starts with a correction. So whether or not you're saying it's just a correction or not, that correction can lead towards a bear market. And if it does go into bear market, then that means it was the start of the bear market and it wasn't just a correction. So the problem with a lot of complacent bullish traders, they go, oh, this is just a correction, it'll bounce. Okay, well then when it doesn't bounce, they go, oh, well, my loss is too big to sell out now and I'll just have to hold and ride it out. And then they get caught in the big wave down because they're so complacent and so naive to the fact that, hey, maybe this is the top and I should start, preparing. And that's the thing, is there's a lot of people complacent right now. And then again, that's the difference between being a trader, someone who's actively doing this every single day. You're way on top of it. And the best thing that I can do is just try and get it out to as many people as possible, right? So enough of the market. This is Micron. This is MU. This is an earnings play today. They're obviously getting smoked. Again, this is not a good sign. A big semiconductor stock, earnings down again. Again, the market doesn't look good. So massive drop here. This $30.80 level you see here on Micron is... it's kind of a support. You'd have to go back to the 3-year chart here to kind of get an idea for where it's at. Right now, it dropped down to like $30 and $31 pre-market, which brings it towards like this 3-year consolidation zone. So, whether or not people really pay attention to this 3-year kind of area at 30.87 is kind of what I'm caught up on. So, I want to be short on Micron, but that $30 level is kind of interesting. So I think Micron's a good one to watch today because of the big drop. Earnings going to have volatility. I couldn't tell you exactly which way it's going to go. I could give you a couple ideas as far as what you might want to do. And really that's this. If the market or if MU stays below like 31.80s or close to it, I'd probably try and get short around 31.80 if it looks good and starts holding resistance for a move down towards the pre-market low and then potentially a breakdown. If it fails moving lower, then we could see it curl up. And if it presses over 31.80, that's going to be a level where we could see a long. So I think right now this pre-market top at 7:30 in the morning, 7:20 at 31.80 is going to be a very key level you want to pay attention to intraday for a short position, but also a potential breakout. And that's the thing, guys, is most of your entries and exits are usually going to be around a key level, which the key level could also be good for short and long. So that's kind of why you always run into that challenging day trading. That's why it's kind of hard, because those key levels where you need to take a position, you could also be taking the opposite position, and it all comes down to who wins that battle right there. So definitely following MU today short. Last one I'll touch on here is FDX. FDX is FedEx. They had earnings today as well, gapping down. See, that's not good, right? Think about a big company like FedEx earnings dropping here. That is not a good sign for the market. Okay, over 50% of all the stocks in the S&P 500 are now in bear market. What do you think is going to happen to the market? You now have over 50% of the companies in bear market. That means the other, I think the number was 53. Today, it's probably 55. So that means the other 45% of the S&P 500 has to do all of the legwork to keep the S&P 500 up. So if those other 45% start failing, what do you think is going to happen to the market? And this is something I said 4 months ago. I said 4 months ago that almost 50% of all the stocks in the Dow Jones were in bear market. We're heading towards a bear market. That was 4 months ago. And now CNBC comes on and goes, oh, we're headed towards a bear market. Like, no, this was coming. We should have been telling people a long time ago that this was coming, and then you could have saved them some money, but that's not your job is. So anyways, we're definitely in some sketchy times. I think FedEx is going to be a good one to watch here today, guys. Got this earnings, big gap down. If you look at the chart, it dropped quite a bit down below its 3-year support. So I think FedEx could even, actually that's wrong. It's lower than that, excuse me. It's down to 170. So if it's down to 170, it definitely dropped right into support. So, right now FedEx is actually at a strong support. So I would honestly kind of watch it long bias and see if the short sellers get squeezed out from the dip buyers here at the 170 price. So anyways. Yeah. Max, no, we don't stream live here on YouTube after the bell. That's something that we do in a private group with some of our trading members. We only trade live and help kind of tutor and answer questions to our private group. But we do always come on in the morning and usually do one of these streams for you guys. Anyways, guys, that's really all I got for you today. Sorry I don't have the camera on. I took it home last night, shot a video, didn't bring it back. I'm using a webcam. The webcam's trash. So anyways, good morning. Let's definitely, so my tip here for today for you guys is really be patient with the market today. In the Fed meetings today. So you definitely got to be patient, let things set up, and really don't jump the gun. The market is not something you want to jump the gun on today. Yep, all the private members have access to our Trade Ideas scanner clouds, and then they get access to all our Trade Ideas scanners in our trading room. So if you don't want to pay $100 to use the advanced scanners, then we stream them for free for you guys in our trading room. So you get access to our high-a-day momentum scanners, reversal scanners. So you get to use all the alerts just without having to pay for the service. Is really the kind of thing there. You just don't get to customize them yourselves. Yeah, no problem. So we'll see on the inside. Yeah, guys, if any of you guys also here on YouTube want to join into our private service, it's the first link in the description below. Hop in, we'll take care of you. Other than that, that's all I got for you guys today. So take care, have a green day, and I will see you guys all tomorrow morning for another trading day. All right, take care.